Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. I was asked recently, how do you stay so calm with everything that's going on? Because there's tons of news being thrown at us. There's company earnings reports. There's, fights all over the world. There's fights within our country. There's just so much that gets thrown at us every day, every hour, every minute. And, there's lots of different ups and downs in the stock market that get caused by this. So if somebody's asking me, like, how do you stay calm? Honest answer is I don't always, but I have the ability to just kind of snap out of it a little more quickly than most people because I'm used to it. Now, I like to use an analogy here of flying an airplane. Now, perhaps this is a bad analogy because we've actually had some aviation accidents recently for different reasons. But hang with me here. So I use the analogy of flying because if you've flown often enough, you have experienced turbulence on an airplane. We all have. And what happens when the turbulence hits? The pilot comes on and says, "Ladies and gentlemen, we are experiencing some turbulence. We apologize. We have to ask you to take your seats and keep your seatbelts fastened until we're able to take the seatbelt light off." Something to that effect. You'll get an announcement like that. We've all heard it if we've been on an airplane because we've all experienced turbulence if we've flown, more than once. There's going to be turbulence. It's just a fact of flying. It doesn't happen all the time. It's nice to have a smooth flight, but plenty of times if you fly, you're going to have this turbulence. But why isn't the pilot coming on and going, "Ah, my gosh, we're going up and down. I don't know what's going on. Well, just hang on." Well, it's because they've been there before. They understand that this turbulence is just part of the deal. And they're obviously doing things to try to lessen that or, try to avoid large danger. They're not idiots. They're not just going to be like, well, here's some turbulence, la, la, la. They're going to warn us. They're going to have everybody take their seats, put their seatbelts on, and they're going to navigate around as best they can. And they're going to have to go through some of that turbulence. That's just a fact of flying. But the pilots are not panicking, because they've been there before, they've done this, they know how to handle it, and they know that eventually the turbulence stops, even if it stops just by eventually landing the plane. Turning that to investments, it's very similar. If you're investing at all for the long term, you've experienced these ups and downs. And in fact, a lot of times we'll experience these ups and downs in a large scale every year. It's not at all unusual to get a 10% drop in the stock market overall every year, maybe twice a year. It's not unusual whatsoever. So we see this turbulence all the time. It can come in different forms and for different reasons, but we've seen this. We've been there before. And that's why we don't really panic and freak out when something happens, because we know that in the end, it tends to turn out just fine. Even when we've had really, really awful large crashes like we did, say, in 2008, 2009, it took a while, but we still came out of it okay with the investment specifically. Now, why is that? The other reason I don't panic is because companies don't just sit there and take it. Now, some do better than others, obviously. Some don't make adjustments and their businesses don't do well. That's just a fact of life and a fact of running a business. But most businesses, if something happens, whether it's COVID, whether it's tariffs, whether it's higher interest rates, just name whatever reason, just keep naming reasons. Whatever happens, these businesses don't just sit back and say, "Oh, well, I guess that's just how it is." No, they are on the attack. They are playing offense. They're going to figure out, how do we get through this and make it to the other side? And not only that, they want to make it to the other side even stronger. So the people running the company, they don't just get up every day and go, "I guess we'll just kind of do this thing. Like they are pushing hard to try to win, to try to make their company successful. So when these things come along, even though their stock price might be dropping, most times the people running the companies are really pushing to make this work. You as the shareholder, whether it's in an individual stock or in a fund, a mutual fund, an ETF, whatever, these executives of these companies are effectively working for you. You are the shareholder. Now, they're also working for themselves because they are shareholders too, but they are working for you to try to make you money by getting their stock higher by making money on the business. So when we see stocks really drop or bounce around wildly, we have to have that understanding that these aren't just things that are out there in space somewhere. These are real businesses making money long term, and they're run by real people who are pushing every day to keep making money. So that provides a lot of comfort, knowing that when something goes down, it's not necessarily meant to stay down. The company's still going to keep pushing to make it better. Now, if there are some less than capable people running a particular company, that's fine. That's just the risk of having individual investments. But what we do is we try to keep up with who is running these companies, what are they doing, and getting an understanding of that so that when a stock drops or when the market drops overall, we have that understanding. We can handle this turbulence knowing exactly what's going on at these companies. I'll use one example. I won't name the company, but a long time ago, there was one company. I don't do this with them anymore because actually they've been struggling in the past several years. But this goes back a decade plus, where if the company's dividend got up to 4%, I would just buy it. Now, their dividend got up to that high whenever their stock dropped, because your dividend percentage is based on how much they're paying out as a percentage of what the stock price is that you buy it for. So whenever their stock price would go down, their dividend rate would go up. And I knew that once it hit 4%, the stock had dropped enough. And that happened over and over and over again. It was just like, all right, it's cheap now, 4% payout, buy it. Hit the button and buy it. Because you knew that the company was being well run at that time. And we knew that if they got down to that dividend payout, everybody else will want that dividend payout too. Step in and buy it. That's one example I use to show how we don't have to be panicked out by turbulence either in the stock market or in individual stocks, because we've seen this before. And the companies, they're actually working hard. They really are pushing to make money and make the stocks do better for themselves and also for the shareholders, which are us. We may only own a tiny, tiny piece of it, but we are still the shareholders. They are really working for all of us who own the company. So whenever we see the stock market drop, don't freak out. A lot of times it's an opportunity. And if we've planned properly, like we talk about all the time, if you listen to this podcast, you hear us talk about having 5 years worth of income set aside in bonds and structured notes and such. If we have that set aside, we can let these companies bounce back over the next 5 years. We've given them plenty of time to figure this out and get their companies back to growth, regardless of what's happening. We saw this even back in 08 and 09, which was a mess. Companies still figured it out. We came back, and about 5 years later, we were back to the highs that we were before the market collapsed. So give yourself some time, give these companies some time, have that 5 years worth of income, but know that in the meantime, these companies are working hard, and we've seen this before. They are not there to fail on purpose. Some companies aren't run well. That's fine. It's a small percentage, really. But a lot of companies are run extremely well, and they will bounce back. They're just made to win.
Thanks so much for tuning into this episode. I really appreciate your support and hope you found value in the conversation. If you enjoyed it, be sure to subscribe, leave a review, and share it with someone who might benefit from it. Your feedback helps keep the show growing. Until next time, take care and stay strong as we learn to retire with peace.